Okay, so I am recording currently because of I stopped my recording mistakenly. So I'm gonna continue this recording. Uh, I started recording, but yeah, this is a fire song. I like it. So yeah. Um. So let's go over something that I've been saying repeatedly, right? So like what I said during the other video. Oh, bro, I don't know what to do. It's not. Yeah, this is the problem I had. Okay, thank God. Now we go into the weekly, right? So we have, what do we have? Actually, the monthly, right? So on the monthly, we have this clear market structure shift, this sweep of liquidity, then we have this market structure shift, and then we have fair value gap, and then we also have this right here. So my plan was that we go lower into this to go higher, to go into here, because stage 1 and then stage 2, right? But then it didn't happen, so this was my plan, to go higher, but that didn't happen. So because why didn't that happen? Because I put a limit right here, I put an invalid right here, an invalid point right here, that if price should go above here, I'm bullish automatically. I was meant to be bullish when price closed above here, to be honest, and also here. I'm still learning that, how to read the monthly buyers and stuff. So right here we also have 50% right here tagged. But yeah, we go to the daily, actually the weekly, right? We have, since this didn't work, this didn't work because this target was my 40-day look back target. So throughout this whole week, what do you think this whole week's liquidity is? Draw is last month's high, and then we have, oh yeah, what do we have? We have our reversal point. So like what I've been preaching from other videos, right, and about myself, is that, let's reduce this. And then this is the, what, actually, you know what? This is the weekly FVG high. So something about the weekly, right? This whole week was basically just an open, low, high, close type of week, right? Now, things about some weeks that we realize is that weeks are basically continuation of the previous order flow, right? Or a new order flow, right? So we have, this whole week was just basically open, high, low, high, and then close, right? This was basically all this week. We have this right here, for this right here, then this is our bigger time frame. We go to the 4 hour, this is a bigger time frame market structure. What market structure shift. Oh, yeah, market structure shift. So as I'm seeing this, what's the next place where I want price to go? I want price to go into this fair value gap right here. If price permits, we go into this fair value gap down here. Well, yeah. But this fair value gap, I would like to see respected. We also have this inverse right here. So this is also a possible point right here. Let's have this fair value gap. So this is very likely a possible point. We also have this tiny fair value gap right here. So now let's go into the hourly. Let me continue what I was trying to say. So if someone is bullish during this week, this is always say a one shot 1Q. We have all of this madness right here from, let's say, from Thursday. We're just inside the range, basically just inside the range, right? Now these are the days that you wouldn't want to trade, right? You just want to look for internal liquidity on the internals. We have a lot, all of this was just range, and then we broke out during Wednesday, and then we started heading higher. So consolidation, accumulation, manipulation, and distribution, right? So if that should happen, and then this whole liquidity and then this whole consolidation was broken out with an order block inside a fair value gap on the weekly time frame. So we took out previous day's high on Tuesday at what time? 11:10, and then 10 made what? Lower what do you call this? A sell sign model. So let's go into the 5 minutes, right? And then let's see what if a setup could have been played right here. During this day, a setup could have been played right here, but it's past the time, right? We have a 2022 model. Sorry, I don't play rock music, so I'm just trying to. I want to play it, right? I want to play like another song because I don't play rock. I don't play rock. Okay, that's way better. So for us to go into this daily high, we're going to a daily or a 1 hour fair value gap. For Tuesday, right? For Tuesday, which PDRA do we see? We see an order block. We see a 1 hour order block right here. So we see 1 hour order block. For us to tag from internal to external, right? So let's see. We go into the 1 day. This is also a 50% of the CE of the week. So 50% was tagged on Tuesday. We went higher and higher, and then we took out previous day's high, and then we started going lower. So if we go into the 1 hour, right, it doesn't look like previous day, but it is Monday. So Monday we took out liquidity on Monday. So Monday opened and then we took out the liquidity. But Monday could have been a let's see, right? Don't know why Monday isn't. I don't know why the name isn't showing for Monday. That's very weird. Very, very strange. That was very, very strange. Monday is right here. Why isn't Monday showing? That is very strange. But anyways, Monday we traded higher, we traded lower, then we traded higher. Take out the liquidity and then we traded lower, right? For this day, let's go into the 5 minutes. How could we have traded this day? Monday was no news day, so we're here. No low sizes if possible, or no trades if possible. But if you were going to take a trade, we have a market structure shift right here. If we go into the one hour, we have this right here, market structure shift. Right here, displacements. 4 a.m. we hit the order block, so now we start expanding, right? Target will be 18 Asia lows right here. So now let's go into the 5 minutes. This would actually be a market maker sell model on the 15 minutes. Looks like a good market maker sell model. So market structure shifts. It should be way probable if we have a fair value gap here, but a breakaway gap was formed. The market structure shift right here. Stage 1 right here. Stage 2 right here. So if this is stage 2, then we'll go on the 5 minutes or on the 1 minute, to be honest. Let me go on the replays. Okay, so in the 5 minutes we have a 1 hour in quotes breaker, right? Let's have this tiny volume imbalance right here, and a breaker right here. Actually, let me use the continuous contracts. And here, let me show you what I'm talking about. So for the continuous contracts, we didn't take any liquidity, but we have this long wick. 50% of that, we take that. And now we're going towards the sell side on those right here. So we have right here, we have a market structure shift right here, right? And then this will become a breaker. And then if we go into the 5 minutes, in the 5 minutes we have, on the 15 minutes we have. Now this is why this wasn't here, because 1 plus 1 equals to 2. We have market structure shift plus we have this. So this was enough, right? So from 7 from 7 to, let's not also forget midnight open, right? Midnight open is what? Right here. Midnight open. Let us not forget the times, right? So from 6 to like 10 or so is 1/4, basically. And this is when our silver bullet time starts from 7 to 8:30. So for this setup, basically, you go on the 5 minutes. On the 5 minutes, and then what do we see? We see sweep of liquidity, another sweep of liquidity, and then we see what? We see displacement, right? On a 15 minutes, on a 15 minutes and 1 hour PDRE, right? Then we see market structure shifts, and then we see auto block, and then this was a sell entry for what? We use regular trading hours. This was also a good short to take. Also a good short to take. Let's see. Also a good short to take till we get this lows right here. The PM session lows right here. But Asia session lows are good for intraday liquidity. So I'm just saying what could have happened this week, right? So right here, doing 7. What do we see for here? We see that when this new quarter opens 6, we open high, low. So let's put this right here. If we go into the 1 minutes, we see something, right? We see something. So we see a displacement right here, right? We see the displacement. Then we see, what do we see? We see price going higher. Now you might ask, where would you enter? There's this auto block right here. If I enter on this auto block, I'll pull my stop where? Or if I enter on this breaker, I could put my stop on here, right? If we place shorts, right, I will likely put my auto block right here, my stop right here for what? To hit Asia session. And then this would be scary. This would be really, really scary. So that's why I normally target the rejection block, because things have been happening a lot. So intraday liquidity, I always target the rejection blocks, right? So for the 5 minutes, on the 5 minutes, this is even a good setup, to be honest with you. You could just put stop above this high, and then you could ride it through the rejection block right here. So this would be a very good setup. If we enter right here, on this right here, since this is the only, or even this order block right here, but most likely I'll enter right here. Immediately we get this close above, below, I'll enter right here, and then I'll wait for it to target. So if I get 3 contracts here, and I'll ride it through out here, because this is stage 1, stage 2, and then down here. If we look over here, it came up again, just making low resistance liquidity run, and then it took out Asia session lows. Now the thing is that I don't like seeing this. I like seeing this placement, so usually I just, yeah. But a question can come in mind, that when will I know, or when is the right time to use this model, right? I really do believe that when there is a second stage distribution, This is the best way to use this model. When there's a second stage distribution, at this time it always happens every single day, but not always every single day, but when it presents itself, you will understand. Second stage distribution towards a pool of liquidity on the other day. So I'm gonna write it down on my journal. And then this setup was what? The 10 a.m. has different setups, right? Now when it comes to the 9:30, right here, what do we see? We see this market structure shifts. I actually took this long, to be honest with you. I took it long towards because I wanted price to take out this high right here, which was at previous quarter or something. So I wanted this high, and then I entered right here. This is where I entered. And you might ask, why did I enter right there? Because of this right here, because of this inverse right here. So we have inverse, we have a market structure shift, displacement. So when price was just being weird, I exited at this highs right here for like, I don't know how much, but it was like a very good amount. I got out right there, and then stop loss to break even, then I got tag out. So this was a very good setup. Now another question is, what if we were expecting this, right? So we hit Asia's lows, right? Another good way where you could use the setup is after we hit Asia lows, we have what, sweep of liquidity right here. Sweep of liquidity right here. 1 minute what? Market structure shift, right? I'll enter right here, to be honest. This is where I'll enter. Volume imbalance because this market structure shift. And then I enter. This is how I will normally enter right here. But the time, that is the time. I wouldn't enter right there because of the time. So if I was gonna trade this, I will enter right from here to here. That's not a good one. So I'm gonna wait. Because normally I like entering on the silver bullets if we have a reversal. So let's see, 4 standard deviations. We have a silver bullets right here, so this is a very good place to enter, right? After all of this nonsense, we just go under 5 minutes, right? This is where I entered, right? Let's see, from here to up here, 16, but this is the origin right here. So let's go into the 5 minutes. Then we have 2 standard deviations right there, this right here, and then I entered right here to this high right here, which was a good one. I could have actually held it to 2.5, but it's decent. It's decent. So this was just a day where you don't need to stress yourself. You don't need to do a lot of fancy things. We have stage 1. We have second stage complete right here, and then we have second stage right here complete, and then we have all of this choppiness, right? So if we go into the 1 hour, right, let me remove this right here. Remove this, remove this, remove this, remove this, and also remove this, and then remove this, and then remove this. So also remove this, and then remove this. So for this week, right, after this should happen, another setup that could come right here is the, like what I said, is let's go into the 1 week, right? Let's see. Here are the lows. Weekly FVG high. Weekly FVG high. We go into the daily. We refine this. We go into the 1 hour, and then we refine it enough. And then Tuesday. Tuesday, because we only trade on days where we are 100% sure, right? Tuesday, I will probably not trade on Tuesday because we are inside of this range right here. I'll most likely not trade on Tuesday because we are inside this range right here. It's not a probable day right here. But for intraday liquidity, you could target that. Now, for intraday liquidity, we could see that we hit this 1 hour order block right here. We hit a 1 hour order block, so there was something that I remember that if we are in this, right? We go from 0 to 100, from 100 to 75, from 100 to 50, 50 to 75, 75 to 25, right? 0 to 100, from 100 to where? To 25, from 25 to, from 75 to 25, from 25 to 75, and then back down, right? So if we use this logic, from 0 to 100 logic, we see that we were in 75 of this consolidation. We have this order block right here. We tagged into the order block. After we tagged into the order block, we traded higher. We started heading higher. We hit a 50% too. And then we have a CSD right here. So if we go on the 15 minutes, right? 15-minute order block, and then from internal to external, right? 15-minute order block, targeting, we have, what here? What do we have? We have a market structure shift, right? We have a market structure shift. This was on Tuesday. We have a market structure shift, and I remember that during this day we had an SMT, right? We had a huge SMT, and if we even go into the daily, right? If we go into the daily, we could see that during this day we hit, what do we hit? We hit a consequent enrichment, right? Of this candle right here. Tuesday we took out previous day's low, and also we hit consequent enrichment. But on the 4 hour, we actually hit a good consequent enrichment. So for longs towards to take out these highs, right? So we have that set. So we even like went to this fair value gap right here. If you look on the 4 hour right here, we went to the 4 hour. And then if we go to the 15 minutes, we have what? We have a market structure shift, right? Let me get this right here. We have a market structure shift. Market structure shifts. I remember there was an SMT right here. So this was an SMT right here. Then we have I don't know what this is. I'm gonna like it, to be honest. Sorry, I need to play some music. That is it. Okay. I'm trying to remove this bar. I'm just trying to see my screen better. So we have this fair value gap right here. And I'm the most confident I've been in my life, so I don't really put up or accept men who treat me like dog shit anymore. But then that just leaves me having no interactions with men at all. Then we have, since we have 9, and if you look over here, we have this right here. This is an A. This is the definition of an A plus setup right here. A perfect A plus setup. We have market structure shift displacement down, and then we are below the 8 a.m. and then during 6 a.m. we have 6 a.m. right here, but we go below the midnight open. So as we're lower, we see what's this right here. This lows. If we go on the 5 minutes, you see things better right here. All of this consolidation. Remember, there's news at 8:30, so 8:30 right here was news. Now during this time, will I actually be trading at this time? I wouldn't want to trade. I'll just need patience, right? Because the thing is that the thing is that I know myself, and I know that I will not be patient during this time, and I want to trade for higher, like trade for us to be going higher, right? This is a trade I would have gotten taken out, because if I took this long, right? Okay, so we're going to continue. So this is Tuesday. Patience is the key. Tuesday we have 8:30 news, so 8:30 is right over here. 8:30 is right over here. We have 8:30 right here. So on the 15 minutes we have a market shift already, and then we have price is going higher and higher. To be honest with you, I would have even taken it right here, but that's if price is live, and I'm trying to be honest right here, because if I'm going to be entering, right, I'll enter right here, because one thing that we should be noting is that we need to learn how to identify quality setups, right? We have a sweep of liquidity right here, so a 15 minutes time frame, a 15-minute pool of liquidity equals to what? 1 minute sweep, 1 minute market structure shift and displacement, and then entry right here. A good entry would be this from here, right here, and then the exit would be down here towards where? The buy side liquidity up here. Now if you go on the 15 minutes, right, since this entry is happening on this 15-minute time frame, right, we could use a number of things. We have previous days high, we have okay, we have this right here, we could use, let's use it, yeah. We could use previous session highs right here, right? Of the our regular trading hours, right? We also have this right here. If we enter more contracts right there, that would have been the play right there. Let's see. If we entered how many contracts? Let's say we enter one contract right here. We see this high right here. We see this high right here. That high is the 14 p.m. high right there. So we swept the lows. So we're going to be targeting the high. So let's say we target the high right here. We have this high right here. We also have this high right here. So now let's go into the 15 minutes. Oh, and yeah, this is the 15 minutes. So let's go to the electronic hours. If we go into the electronic hours, we see that this is the high right here. Now this high got swept. So this would be the next high right here. So from internal to external, this high right here. You could also take out this high right here, because this is the previous session high, previous AM session high. This is the AM session high, but this is London, 11 AM high. But we have, let's say we entered right here and then stop loss below here. That'll be risking how much? That'll be risking $400 right there. If we put it right here, that means we'll be risking 1,800. Now, most likely I will remove all my contracts right here, but 400 and sorry, my nose is kind of bad, but 400 I will most likely remove all my stuff right here. I wouldn't like to take my profits right here. I would like to secure all my profits right here. Of course, the term is like, why won't, because it's just you want to have that security, right? I will definitely exit all my contracts right here. This should give me a 3R and I'll be perfect, and that'll be way perfect. Let's say I entered, right? Let's say I basically entered right here, right? I basically just try to enter right here, just off the 15-minute time frame. I could enter right here and then put, the reason why I will enter on this is because of this is a huge candle, so the 50% is more probable from what I've back tested. If price doesn't go into the 15 minutes, then if price doesn't go into the mean threshold, then I just don't, then I miss the entry also. So off the 15 minutes time frame, we could see that if we entered right here, right, we could see that this on the 15 minutes, and then our stop loss would be, this is where our stop loss would be. Our stop loss would be right here. I'm sorry, I'm just trying to, I thought I wasn't recording, but I am. I'm trying to just remove this bar down. Just trying to remove this bar down. I don't like seeing it. I want to see my full screen. Okay. So this would be 370. But then it would be a good but the thing is security, right? We want security rather than just thinking about taking profit and all that. This would be a good take profit. This would be a good stop loss right here. I like how I would rather risk less than 500 or no more than 550 for my stop loss and one contract alone, especially days where that are low probability. So yes, but this is an A plus. Look, why? Because we have SMTs right here, because ES had SMT right here. we had an SMT right here. And if you look over here, since this is the origin, from here to here, we have 3 standard deviation. You could even put it to 3 standard deviations to make it 1875 box. We could even enter of the 15 minutes, but yeah, we could even write it up to the 4 standard deviations. This is how many points? This is 839. So yeah, we could have read it to 4 standard deviations. If you read it to 4 standard deviations, that would be 2k. But now we want security rather than anything else. So that is better. So security rather than anything else. Remember, what time did it form? This is the manipulation leg. All of this right here is the consolidation. Manipulation leg would be right here. And it goes with our standard deviation rules. 39. 4 standard deviation, we reverse. And here, if you look at this right here, we retraced, we hit 2.5, we retraced down here towards higher prices. So that is the A plus setup for that day. Now let's see for an A plus setup if there was one on Wednesday, right? On Wednesday, there was an A plus setup for shorts, right? Let's say we have this lows right down here. Right now, we're just engineering liquidity. That's for the PM session. I mean, for the London session, just engineering liquidity. Just here. And then we have what? We have a sell profile, right? So we have stage 1 right here, complete. And then we have stage 2. All of this right here is a stage 2. Stage 1 is this right here. And then for complete. And then we have stage 2 right here. This is low risk, stage 1, and then stage 2 right here. So now let's say we have from here to down here, and then we get our 50% right here, premium and discount. We hit 50%. We see, what do we see right here in 50%? We have this inverse fair value gap. On the 1 hour, you could see things that are more refined. 1 hour, we see this 1 hour fair value gap right here in the 50%, aligned perfectly with the 50%. Let's go into the 15 minutes. Aligned perfectly with the 50% of this daily range. Remember, this is first stage right here. This failures in this retracement, first stage. Low risk, first stage. As soon as we make this market structure shift right here, first stage, and then second stage right here, boom. And if you look at this second stage, what does this second stage align with? This second stage is the silver bullets time. So this is what is the model continuation from yesterday, from the from the 10:45 reversal, and then we go down and go down. So this is the continuation of yesterday. So a new profile. Now, where is this going? This is going a retracement or a reversal. So now, if we look over here, 1 hour fair value gap was tagged. Let's go to the 1 minute. If we go to the 1 minute, no, that's the 1 hour fair value gap. So we go into the 5 minutes. We then enter on the 5 minutes. 1 hour fair value gap was tagged. We go to the 5 minutes. What do we see? We see from what time? From 7. We look and then we see a sweep of liquidity. You look over this low, is there market structure shift with displacement? Yes, there is displacement. After displacement, what do we see? Do we see a fair value gap right here? And what do we see? We see a fair value gap right here, and then we enter right here. And now this is a very good A plus setup. Right here will be my entry, and then I will put my stop right here. Or I could put my entry right here. Most likely I'll put my entry right here because I don't want to miss the setup. But then where will I put my stop loss? I'll put my stop loss above here. Well, that's too tight. I'll put my stop loss above here. Now, where exactly would be a very good place to exit off? A very good place to exit off would be down right here, because this is our retracement leg. And during this day, was there news? Yes, there was news at 8:30. There was news at 8:30 and the setup presented itself. So this is a very good setup right here to take your trade. So we have also this displacement right here. We have this fair value gap right here where you could have entered. If we enter layer right here, let us calculate how much we would have risked. How much we would have risked would be 300, right? Now, why won't I put it right here? Because this is a long wick, right? And I'm not going to be risking much. So 300, I'll risk 300, and then I'll like to take all my profits right there. But if I'm going to be risking this much, which is a tight stop loss, which is a very, very tight stop loss, I'm going to get 3 contracts towards this take profits right here. So now let's say we enter right here. Where am I going to put, let's say I use this break as my entry, right? Where am I going to put my stop loss? I'll put my stop loss right above this high right here. Right here. Right at this breaker right here. This swing high right here. Now what am I going to reduce my size to? 2 contract size and 2K. So there are different ways on how to take your position size and all that. So let's say our take partials was right here. Another take partial was right here, and all that. Take partial was right here. We could even say right here, to be honest. So after we have this right here, after we have this run right here, we then lock our positions to break even, and then this is a 6 hour automatically, so 5.94 hour, so which is a very good risk to reward, meaning this whole week would have been really up. So basically 1 and 2 trades for the week. So basically we should be aiming for 2 to 3 trades per week. So 1 trade done, 2nd trade done, 3rd trade right here. Let us see right here what trade this is. Remember, this right here is the 2nd stage right here. What do we have? We have low risk, we have 1st stage, we have 2nd stage right here towards this lows right here, or even this low right here. This low is a very good place to take off right here. So this would be like a 3 hour right here for internal liquidity, and that would be the 8th. So this would be 1, 2, and 3 trades for the week, and you're done. 3 trades for the week, and you're done. Thursday, what does Thursday have? Thursday doesn't have anything for us. Thursday is unemployment. Thursday was unemployment claims, and then Friday would be something else. So basically this is just the trade setup. 2nd stage distribution. If no 2nd stage distribution, then it would be a 1 minute setup. This week was really something. Last week too, I remember I took a trade like on Tuesday or so. On Tuesday I took a short setup. Tuesday I took a, let's go on to 15 minutes. On Tuesday I took a setup, a shorts, and then I took a short on Wednesday. Wednesday I took a short setup. So the short setup I saw for Wednesday was this, right? I saw low risk, stage 1, and then stage 2 right here. So what I did was I got this order block right here. Got this order block right here. Then I went to the 5 minutes. I remember this trade. It was an A plus setup. So I went to the 5 minutes. So I got a 15 minutes order block. I went to the 5 minutes. And then no, it was this one right here. It was this one right here. If I remember vividly. I went to the 1 hour or 15 minutes. What was it again? On a Wednesday. Oh yes, I remember. It was a 1 hour order block. It was a 1 hour order block. And then I went to the 5 minutes, right? Remember this day. I went to the 5 minutes and then I saw the setup. There was an SMT right here. There's an SMT right here with ES. Then I saw this entry. There was first stage. And then I saw, after first stage, I saw this right here with SMT. Then we had this failure swing. And then we saw this breaker. And then this is where I entered right here. Shorts. I entered my shorts right here. Stop loss above here. Take profit at the consequent enrichment right there. Then this was my take profits right here. That was my short right here. And then market open. Yada yada yada. If I was looking for longs, this would have been a long that I would have taken. Sweep of liquidity, 5 minute sweep right here. We use replays. Bless me. 5 minute sweep. Five-minute sweep. Boom. Market structure shift. Displacement entry right here. Now on Tuesday, where would I have long if I was looking for longs during this day? I'll have long from, put my stop loss down here. Targets above this high right here. And let's see, let us calculate our risk size if we were trading longs during the day, because I don't know how many position sizes I entered. I'm just speculating right now that what if we enter longs during this day. So if we enter longs, we have partials right here, and then this other partials right here, right? You could even do from here to here. let's get this right here, right? We have this right here. We could even get the silver bullets right here, from here to here. Let's get forward standard deviation. Let's remove that. So below here, anything below here is a good one. So but the origin from where it started from, right here, and then this is a good place to enter from. Right now, it doesn't even need to be on with the rules, right? Because this is basically the time. This is basically the silver bullet time. It doesn't need to be 39 because this is basically the time, right? And the origin. So you could take it all the way to 3 standard deviations. If we were trading during this day, let's see how much we could have. Let's say we try to buy, we take it below. This would be 400 basically, and then let's say up here target to be $2,000, which is a good amount. This will be a 5 hour, so basically there'll be a lot of good things, right? Of good trades, right? So basically this would be our second stage right here. If we take from here to here, from here to down here, then we get quadrants, we get grading, right? You see that we went below 50%, so this is where second stage should be. So if we are to enter right here, we'll see something. We'll see that right here we have a market structure shift right here, and then even this market structure shift, we have this fair value gap right here at 1038. Take another long position right there. Stop loss below this low right here, or this right here, towards this high. If you want to get a good position right here, this would be a 2R. Boom. And that is a silver bullet. Or what you could do is that you just use the fair value gap, because if you look over here, it aligns. Just use the fair value gap right here. You could enter on the 50%, or you could use the rules. You could enter on the premium end. You buy, stop loss below this low, take profits up here. Look how beautiful that is. Long position right here, stop loss right down here. Now for me, I like to become very aggressive, so I like to enter faster. So right here, that means you'll be risking this amount. So yes, so that is just looking how much I would have made and lost, and the risk behind every single thing. So I'm gonna put that right there so that I could come back to this one. So this is for Tuesday, the trade that I remember. I took this short, I didn't take the long. So for 2 to 3 trades per week, so 1 trade Monday, 1 trade Tuesday, 1 trade Wednesday, 1 trade taken. Now Monday, was there any trade on Monday? There was no trades on Monday. But the Monday provided any setup? I'm not sure yet. So here we have a market structure shift on the 15 minutes right here, and then we also have this is also our original market structure shift, and then we have a fair value gap right here. 10:30, we came down. We could even take this high right here. This is the 15, so this is the PM session high right here. Monday, no, this was This is oh, sorry, that was Wednesday. So this is Tuesday right here. So this was also going to be a very good long. Oh yeah, I took a short during this day. I took a short right here. Why did I take a short? This was my market structure shift right here. The market structure shift right here. This is my stage 1 right here. This is my stage 2. Then I took a short towards this low right here. I took the shorts right from here. Then I go from here to here, 50%, order block, fair value gap, and then I took the short towards this low right here. So if you are going to be longing, let's see here, 50%. If you're gonna be longing, this would have been a good long right here. From here to here, right here. This would be a very good long. So let's say we went on the 5 minutes, right? During that Tuesday, right? Let's go to this Tuesday I just passed for long setups. There was a short setup and there was a long setup. So right here was the Tuesday. Right here we have, this would be a 1 minute sweep. If we go into replays mode and play this back, let's go into the 1 minute, shall we? So we have a 1 minute sweep right here. 1 minute sweep of liquidity, 15 minutes 15 minutes period array, and then we have right here market structure shift right here. We have a fair value gap right there. We could capitalize off that. Now another question comes, that where would our price target be? Price target will be above this high right here. All of this high is right here. All of this high is right there, but then we now have London highs right here. We have London right here. So what's gonna happen is we're gonna enter right here. We're gonna go from here to here, since this is our point of origin. So we'll have 4 standard deviations right here. Then we have 3 standard deviations. Then we have 4 up here, which is this, which is going into the 4 standard deviation up there. So we have the silver bullets right below here. So we have boom. This is it right here. This is our entry right here. We have from here to here. We have this market structure shifts with this kind of right here. So we have that entry right here. We have the low risk. That's good. We should be showing it. So we have this long right here. We have this long stop loss below the body, and then price targets right up here. Of course, I would have taken drawdown, but then if I should enter right here, my stop loss could also be right here. My stop loss could be here, down here. That would be 17 pips or points. It could also be right here. That means I'll add more positions. So this is basically the things that happened last week and also this week. So what's the main takeaway, right? The main takeaway is just the setups that could have formed basically on all of these days, right? That's just the main takeaway, the setups that could have formed in all of these days. So right now my plan for tomorrow is that we should just go towards those highs right there. So let's see if we just swept it. So my plan right now is that if we go over to the DXY is still going higher, then we just sweep this high right here. So this is where our SMT will form, because we're bullish on NAS, but we're bearish here. So we're more bearish on ES and also on YM. So I will actually trade during these 2 days rather than trading the Nasdaq. So for tomorrow. So this is just it. So yeah.